when we moved here from England, we didn't have the money to pay cash for a house or, for 2 cars. We had down payments for them. Debt and lending generally, if it serves a purpose, then it can be really beneficial.
Hey, this is Shay.
And this is Carrie.
Welcome to the Pocket Change Podcast,
where you'll learn better ways to spend, save, and invest and take control of your financial journey.
Scary, we're still early in the new year, and I know a lot of people make financial resolutions and want to get their finances right. So they still can. I want people to know you still have the time and the ability to do it.
That's right. There's plenty of time to, think about what your financial goals will be for this year and setting yourself up for the next years to come. So today we're going to get to talk to one of our financial champions who specializes in that.
Yeah, and really helping our members, get out of debt or maybe, use debt wisely so that, it can be beneficial for them.
That's right. We're excited to welcome our guest, one of our financial champions here at Leaders, Keagan van Wijk. Welcome to Pocket Change.
Thank you, Carrie. Thanks for having me. I'm really excited.
Yes. So tell us a little bit about yourself and your role here at Leaders.
Yeah, so I'm originally from Johannesburg, South Africa. Went to school there and everything until I was about 18, 19, graduated high school, and then moved to London to study undergrad. And when I was there, I studied undergraduate degree in law, did a graduate degree in law, which is kind of like sitting the bar exam, practiced as an attorney for just shy of 3 years. And then when my green card came in, moved to the US, which is just over 2 years ago.
Wow.
My wife's from here in West Tennessee. She's from Memphis, but she kind of grew up overseas and we met in South Africa.
Oh, wow.
And then she moved to England after we got married and waiting on the green card stuff. But yeah, we've been here for just over 2 years, and now while I'm here at Leaders, I've been in a couple roles, but currently I'm our Director of Consumer Lending, which essentially means all of our consumer-facing loans. So those are all loans really excluding mortgages. That's credit cards, auto, personal loans, and HELOCs.
Okay.
So that's a nice jumper you have on. So tell us, some might call it a sweater. What are some other differences we might hear from across the pond?
Yeah, there's a couple that have got me into trouble that nothing terrible, but the first one that comes to mind is the word diary. So instead of saying a calendar, I'll be like, oh, I'll check my diary. And sometimes people give me grief about a grown man checking his diary. That one always comes up. There's a South African one, which is kind of crazy, but we call traffic lights robots.
Robots?
And I didn't think about it my whole life until I met my wife, and she was like, that is insane. And I agree. It's not a robot. And one that came up last night actually was the front hood of your car. We call it a bonnet, which I think is for your hair or your hat, something like that.
That's
so
cute.
It's a covering, protection.
My wife broke down last night when I told her that. So that's those are a couple that pop up.
Well, I have a question for you. Do you say pastels or pastels?
For
a pastel color?
We call it a pastel.
Pastel. Okay.
Yes, it's kind of in between.
Okay. All right. Well, I've heard other people say it differently, so I was wondering how you said that.
And that might be the South African side. We have they're a brand there, but I think we call it pastels.
Okay. Curious. Okay, so what was it like to transition from being a lawyer to banking?
Yeah, so from like being a lawyer to the lending side, there's actually, kind of quite a bit of overlap, especially for the type of law that I was involved with. So I was more involved with numbers, finance, a lot of companies doing that side of things. So I got to spend some time at Barclays, which is at a British bank. They have some presence here, but they're a British bank.
We might say Barclays in America.
You got to do what you got to do with what they are. They're moving into a new market. That's their name. But I was involved in their team. I think it was the debt capital markets team. So it's raising debt for them to then use, for lending or other purposes. But most of the time I practiced helping, hedge funds and private equity funds get set up and run. So a lot of that's numbers driven. A lot of that's more business related. So the overlap was there's quite a bit, and it may not immediately be clear, but when you're assessing risk, that's kind of what lawyers do anyway. So they just call it due diligence versus underwriting in a lending case. So the thought processes are similar. What you're assessing is different, But when it comes down to the problem solving and coming up with solutions, there's actually quite a bit of overlap between the two.
Okay.
Yeah, all about assessing risk and, making the best decision for a company or the member in this case. So why might people take out a loan? It's still in the new year, and so people are maybe exploring options. So what are some of the different reasons?
Yeah, I think with debt and lending generally, I think it can serve people if it serves a purpose and there's a reason why you're getting it, then it can be really beneficial. It can also be really risky for people if it's, not being used correctly or if you're overextending yourself, but it can really serve a purpose and be beneficial to people. The example, kind of springs to mind for us is when we moved here from England, we didn't have the money to pay cash for a house or, for 2 cars, whatever it was. We had down payments for them, but we didn't have, the liquid cash to go in and buy all of that. So buying a house, having somewhere to stay, and that be something that we own versus renting. We were in an apartment in England. We wanted to make sure we had a house here that we could raise a family in. That's something that enabled us to own, the home and keep that for many years. And also, for a car, it serves a purpose. I can use it to get to and from work. So does my wife. So there was something that we were able to do. We weren't overextending ourselves on the debt, but it wasn't just something that we wanted, a pair of shoes and, I'm going to go get, a personal loan for that. It served a purpose, and that's where it can be really beneficial for people if it's used correctly.
I think sometimes we hear financial experts break up like good debt and bad debt. You can take on debt, and if it serves a purpose, like you're saying, or it's going to help you increase an asset, like your home's going to increase in value, or you take out maybe a student loan because you're going to increase your education. That could increase your salary and your buying power. So, or a car allows you to get to and from work, and that gives you a salary. So I can see the difference between maybe a good debt or a bad debt. And so that's the way it can help people if it's used properly.
Yeah, 100%. 100%.
So what solutions do we offer here at Leaders for our members to help pay off debt?
Yeah, in terms of paying off debt specifically, we have a few options. We have, your traditional personal loans, which can be unsecured, and that would be personal loan or a specific debt consolidation loan. We also have HELOCs, and we also use auto cash out refis on autos. Those are usually the primary ones, and then we also have balance transfers on credit cards.
So tell us a little bit more about a HELOC. What's a HELOC stand for, and what does that entail?
Yeah, so HELOC stands for a home equity line of credit. Essentially what happens there is we're looking at how much equity you have in your home. So how much your home is worth versus how much on a mortgage or how much debt is on it already. So if you think you own your home, it's worth $200,000, you have $100,000 left on your first mortgage. Well, that difference at $100,000 is equity, and you're allowed to get an additional loan based on that equity. The line of credit part comes in terms of allowing for flexibility. So usually financial institutions will have a period where you can use the money, freely, meaning use it, pay it off, use it, pay it off. And that's usually, 5 to 7 years. With Leaders, that's 7 years. And you'll be able to use whatever the available funds are for that period. And then at that cutoff point, it becomes like a regular loan that pays off over an extended period after that. But it really allows you to take advantage of either the value increase on your home or the debt that you've paid off. And typically it comes with a lot lower interest rate because you're securing it with your home, which is why it's a really helpful tool for a lot of people, especially when they're paying down high interest debt.
Okay. So you mentioned cash out refinancing. How does that work? How can it be helpful?
Yeah, it works similarly to, a HELOC in terms of it takes an asset and looks at the value, but the difference between the value and how much is owed. That one is more like on an auto or for vehicles, and same concept applies. Car's worth $20,000, you've got $10,000 worth of debt on it. In that type of situation, we say, okay, we could give you $20,000, and then we would refinance your existing loan, so it would pay off the $10,000 that's owed, and then you would just owe $20,000 on this one. And that difference in cash, that $10,000 difference, is for the member to choose to use how they want to. Which, if you're paying down debt, paying off a credit card or other high interest debt, it can be really beneficial to pay all of that off and just have one payment in the car versus the 3 or 4 that you may have at any given time.
Sure, that makes sense.
So we've got the HELOC, cash out refinance, and then some people have concerns about credit cards. So how can they be beneficial?
Yeah, credit cards can be beneficial in a couple ways. Sometimes you have a interest-free period on a credit card. That's can be really beneficial if you're lining up a larger purchase that you know is on the way. But it also can be really beneficial in terms of the reward side. So, at Leaders, we offer a couple of rewards cards, one that's points, one that's cashback. So our Compass Black card is a cashback card, and that's 2% flat. We do have, promos that can allow it to go up to 3%, but kind of as a base, it's 2% on anything, no limits. And essentially what that enables you to do is earn rewards on things you are already spending. So thinking if you go to the grocery store, you can pull out your debit card, spend with it, that's fine. Or you could go and use your credit card, get 2% in cash back, and then pay it off, a week later, or make sure you're not rolling a balance. Make sure you pay it off. But if you use credit cards the correct way, it can be a really beneficial tool for people to save up. For our side, we've been using the Compass Black cashback card for just over nearly 2 years now. And it's going to help pay for a vacation for my wife and I later this year. So that's something that we didn't have to save for. It was just happening in the background. And it was just, we're going to Walmart, going to Aldi, whatever it is, you're swiping that and you're earning money off the back of it, which can be really beneficial for people and not having to save specifically for certain things.
So what have you found to be most helpful for our members?
Yeah, at the moment we see a few things. First one being a HELOC. That's kind of the easier one for people who've got kind of debt to pay off. I say it's easier in a sense that, usually the rates are lower and we can offer a bigger amount. If you've got a larger amount of debt that you need to pay off, or you've got debt with multiple institutions, you can use that to wrap everything into one payment, which will usually be lower than what those are. We're also seeing cash out refinances coming back in, and those can be really popular, especially for people who don't own a home. They can leverage that as an asset that they have and can use that to pay down. But then we also have, just our regular debt consolidation and just regular personal loans. But the important thing is that we meet the member where they are, and that's where our financial champions and, underwriting team really assess each person's needs specifically. We're not just going to offer you something we think, is one fit for everybody. It needs to be individual and specific, and that's, working with our teams, that's where they really can help give something that's beneficial to that specific member, which may be different to the next member who's walking in. And it's hard to say just generally what it is, but we typically see those, different tools. And then the members, with their story, whatever it is, the specific debt that they have, maybe life, changes, whatever it is, that's where we kind of work through those solutions with them. And because we're a credit union, we can be, more quicker than some of our competitors here. We're more flexible and we can be more precise to what the members' needs are. And when we assess the situation, go through, figure out some more of the background, we can really hit the nail on the head with what is affecting the member and come up with the best solution for them.
Yeah, I think that's really helpful. And all these different, tools to either manage debt or pay off debt are helpful to our listeners. And so with that advice you've already shared, what's the best financial advice you've ever been given?
I have a couple. One, some people may have heard of before, and it's from Warren Buffett. And it's one that says if you, when everyone's swimming, everything's fine, but it's when the tide goes out, when you see who's swimming naked. Essentially, for me, that's just a measure of, who's taking on the risk. Because when times are good, everything looks good, everyone's swimming. But it's when the tide goes out and when things aren't so good as you see the people who've set themselves up for success. And for, for personal context, that's, am I overextending myself? Am I trying to, chase the Joneses and that sort of thing versus setting myself up financially? The other one is something my grandfather shared, and it's a common saying, but I remember it. It's, look after your pennies because the pounds will look after themselves, or look after your pennies and the dollars will look after themselves. And that's something that's kind of stuck with me, is if you're mindful of everything, even the small things, the bigger stuff will tend to look after itself. And this is the same grandfather who I remember being like 7 or 8, and he had like a pound coin or something in his wallet. And I was like, why are you carrying foreign money? And thinking South Africa has the rand. And he's like, well, if I carry foreign money on me that I can't use, I'll always have money on me, which means I'll never be broke. So I have some South African rands on me. It's like 20 cents worth of money, but I always have that on me as well because that's stuck in my head.
That's great. I
Never
love
going to
that.
be broke.
Okay, so this is the Pocket Change podcast. So we do ask all our guests this question. I'm sure you've heard it a time or two since you're one of our biggest fans.
Oh, yeah.
So if you were to find some extra change in your pocket that you could actually spend, what would you spend it on?
I'm really into my sneakers. What works kind of wear the same or similar things as my work uniform. But on the weekends, I'm really into my sneakers. I have I do try flip some on the side, so buy them and sell some. But I have my eyes on a pair right now that I'm looking to go into, and hopefully that can get in the next couple of weeks. But if I had some extra money, that's what I'd
where
go
it's
for.
going.
Don't need to take out a loan for those.
Hopefully
Save
not.
it up.
Yeah, definitely not. If that not be a good one, but not for those.
That would
Might be bad
debt. Yeah.
Bad debt on that one.
All right. Well, thanks so much for joining.
Before we end, I have a couple questions for you
okay.
guys. So maybe a curveball to throw in there.
We never get asked the question.
So that's kind of want to come in, change it up maybe a little. If you guys could have anybody on the podcast, who would it be and why?
Oh, wow.
Oh, I know who I would have for you.
Go ahead, since you know, I got to think about it.
Probably my favorite author, Brene Brown. Okay. She's an author speaker. She's big into data analytics with psychology and the mind, and she's just really interesting to me, and I would love to pick her brain.
I would ask some questions there as well. That sounds like should be great.
I guess thinking financially, we talk a lot about, finances and financial education in the community. So why not ask Dave Ramsey to come on? Okay. That'll be my suggestion.
He's also
pick his brain a little bit. Yeah, he's in Tennessee.
The other question I have is, you guys do a lot of work with the community, but what drives you guys every day to come in and help our members?
That's a great question.
Yeah.
And since Shay and I work on the same team, I think it's unique because we both understand, what gets us up every day.
I think for us, kind of like what this podcast does, we're able to educate people in the community. So a lot of what we do day in and day out is teaching about finances, just talking about it. So a lot of people don't talk about it. They want to, keep it quiet and are unsure and don't know. And so we just want to be able to talk about it with people. So we do a lot of that. And so being able to help people, even people who have been unbanked or underbanked, become a part of the financial system in our community and have access to banking, I think is what brings us back. And just seeing the light bulbs go off when they can say, hey, if I save this much, I'll have X amount by the end of the year, or I can achieve my financial goal by doing this. So I think those things help us come back every day.
Yes. To piggyback off of what Shay says, the fact that we get to go out and actually educate our members or non-members, that's one of my favorite parts of the job. And I believe my favorite part personally is getting to go to the schools and talk to, seventh graders and up usually is the ages. And, there's a lot that aren't aware of, what banking is. And so to kind of start planting the seed now so that hopefully the more they hear it, the more they become aware of it. And hopefully it'll make a difference. And maybe they can break some generational cycles of being in debt.
That's great. Yeah, those are the main two I had. I was really curious to get your thoughts.
Thanks for asking us a question. All right. Well, thanks for joining us today, Keagan.
Thanks for having me.
Mm-hmm. Thanks for tuning in to the Pocket Change podcast.
Be sure to rate, review, and subscribe, and check out our full episodes on YouTube.
The Pocket Change podcast is brought to you by Leaders Credit Union,
where we power your passion and make lives better. Cha-ching.
Yeah.
Keagan with the question.
I know. I love that. Thank you.
Made us think a minute.
Yeah.
Leaders is federally insured by the NCUA, Equal Housing Lender.
Learn more at leaderscu.com.